We often find that some people's understanding of this is about as old, outdated, garbled up as this Chesapeake Bay trash boom. So while I work to clear this mess, let's talk about the difference between term and whole life insurance. Now, term insurance gets its name because it's good for only that, a brief period of time, a term of coverage. This period of coverage is determined at the beginning of the contract, and I see them go for as little as 10 years to as long as 30 years. The longer of the period of coverage, the more money you'll pay a month. Now, there are other terms that are quickly becoming outdated known as renewable terms, where you begin the contract at a lower premium, but every set number of years, usually 5 or 7, that premium automatically renews at a higher premium until usually about age 85 or 81, where it cancels altogether. You do not keep the policy, and so because of this, you don't build any cash value within that account. However, in order to make up for these shortfalls, many companies these days are attaching what are called living benefits. These are extra coverages attached to the life insurance coverage that allow the insured to make a claim on a critical or chronic illness. But because of the lack of permanency, these plans are much cheaper, and we often use them to cover large dollar amount needs like mortgages or income replacement. Now, the exact opposite of this is whole life. Whole life insurance is permanent insurance. As long as you pay the premium and properly fund the plan, it will always be around. And because you own this policy, much like when you pay in a mortgage for a home that you bought, you are slowly paying down or purchasing your own coverage over time. So as you make those payments, your costs to be covered are actually lower and lower, which means a higher and higher percentage of those payments actually goes into a cash account that receives an interest rate. And that interest rate can compound that cash into some serious value. These are the types of plans you hear people referencing when you talk about infinite banking schemes or tax-free retirement strategies. But of course, these benefits don't come without their cost. You see, permanent insurance is far more expensive per dollar than term. And so therefore, we find ourselves using these plans for things like final expenses and estate planning, cover expenses that we know will be there at the end of life.